Hey, this is Justin with DayTradeTheMarkets.com on Thursday, December 20th. And what I wanted to do today is do a kind of a bar-by-bar replay of the emini S&P and also gold. Unless the video gets too long, I may split it into two. But just kind of look at what was happening as it was happening and talk about when key structures pop up, what to make of those, what to think of it, what it's telling us. And just as a bit of a brief background, the software that we have basically gives you various pieces of evidence. And there's a lot more information if you're not familiar with this on our website in other videos. But essentially, each of these pieces of evidence is giving you information, and the more information you have, the more stock you can put into that information. And so obviously when you have these clues or these pieces of the puzzle, the more of them that line up or give you information, the better decision that you can make, the more you can increase your edge. Doesn't mean obviously that you're going to have 100% winning trades. That's not what I'm saying, but you can increase your edge with better information, and if you can make better decisions with better information, obviously it translates into better results. So with that said, I'll try to explain this as we go and pause it, but let me go with the emini S&P replay, and then I will look at gold as well. So I've got the chart here starting at right around 10 o'clock Eastern time, and I'll just pause it. At this point we've had nothing but level 1 aggression bars, so in essence nothing has happened. I should say heading into the day that our bigger picture bias is up, so all things equal we would rather be on the long side, but we want to see what the short-term structure, does it confirm that or is it contradictory to that? But with that, that's kind of the thought process heading into the day, I'll say that. So let me go ahead and get this going again, and I've got this obviously going faster than 1 times speed, otherwise we'd be here for 6.5 hours, but I'll pause it when we get any kind of a major structure and we can talk about that. Okay, so here is our first major structure, and if you can see that, let me move the chart up a little bit here. The first major structure we have is what we call a high velocity move, and that is a situation where bulls are getting a bit more aggressive. And so as soon as this occurs, if we want to be on the long side, and at this point our filter's not yet green, the only piece of evidence that we have is that the bigger picture bias is up. So it's not, there's not 5 pieces of evidence, but there is some evidence that we would like to be long. So if you're thinking about getting long, there's some options, but probably the more important or more pressing issue to think about is that this is the first structure of the day. And if you've seen some of our other videos, you know that I like to talk about the first structure of the day, and we want to see if there's follow-through above this buying structure, this first major buying structure, or if there's rejection and the low is taken out and we trade below it. Whatever happens on this first structure, it's not the be-all end-all by any means, but it's a pretty good indication of the sentiment in the market early on. It's a pretty good clue as to the side you want to be on. So as we let this run a little bit more, we want to see first and foremost, is there follow-through or is there rejection? So sorry, I had the hit pause at the wrong spot, but what I can do here is I can stop it, and we can see clearly, so I apologize for missing a couple bars there. We can see clearly we've had a follow through, and in fact you can see that we took out the high of that high velocity move within a bar, and then we had a full bar above within 2 bars. So that's really quick acceptance above. There wasn't any 2 time frame and then back above. It just accelerated right through the high of that. So that's a very bullish indication. And so you can see also that the filter has just turned green at this point a couple minutes ago. At this point you have a couple options. On this high velocity move, one of the trades that we like to take if you like to be on the long side is the high velocity move retracement, which would be a limit order toward the low of that. However, if we get this immediate follow through, it's often a pretty good indication that you might want to pass on the retracement trade and go instead for what we call the high velocity move follow-through trade. And that would be to get long, place limit order basically at the high of that high velocity move. Now, sorry I missed a couple bars, but you can also see that a few bars later then we have this level 3 or extreme buying aggression bar that came into the market. And so at this point, obviously, and our filters turn green, our bigger picture bias is up. So at this point, all signs are pointing to wanting to be on the long side at this point in the day. And so you have another option with this level 3 bar. Again, you can place a limit order as soon as that forms right at the low of this bar, which is a trade that I love. I love the level 3 retracement trade. Or if we have that immediate follow through like we had on this high velocity move, you could opt for the level 3 continuation trade, which would be to place a limit order a tick or two or at the high of this or a tick above it. Okay, so that's kind of the thought process at this point. Another thing you can do is that you can see there's not quite overlap. There's a trade I like called the sweet spot trade where if there are two major structures that overlap, but you can see there's kind of an area in this area here between 31 and 3150 that is essentially the combination of the high velocity move continuation trade and the level 3 retracement trade. It's kind of a combination of those two. So sorry if I'm getting a little technical. It's all in the training, and we talk about this all the time in our member center, but just wanted to kind of throw that out there for now. So that's kind of the thought process at this point. You probably want to be long because the bigger picture bias is up, filter's green, there's some really good structure. The first structure of the day is bullish, and so now we just have to, do we wait to see if we get really quick follow through here and get long at the high of this bar, or do we wait for a retracement to the low of this bar? That's kind of the thought process at this point. Okay, so let me run this forward again. You know what? Let me actually draw a line in here to kind of show where that would be. Here would be the high velocity move continuation trade, and here would be roughly, and here would be the level 3 retracement trade. So continuation trade off of this structure, retracement trade off of this one. Okay, so we'll keep playing this forward. And at this point, I do want to point something out here. You can see that there was a little bit of a difference between the follow through of this high velocity move where there was no two-directional trade. It just basically, as soon as this bar formed right here, or as soon as the high velocity move formed right there, we had follow through. You can see, and then a full bar, a bar or two later. You can see here we had a tick of follow through, decelerated a bit. We had 2 time frame, and then we took the high out. So it's not quite as aggressive a follow through, which in my opinion, and the way that we like to teach this is you want to see immediate follow through if you're going to get on the continuation trade. So I don't really recommend the continuation trade here. I'm more looking at this point at the retracement trade to the low of this bar, or you can do the combination trade of these two. Okay, at least that's the thought process. Obviously nothing's in stone. You could do whatever you want, but that's the thought process that at least that I'm thinking about at this point. You can see there our filter just turned to, a couple things happen here. Filter turns to strongly bullish, which is obviously an indication. We've also got a support resistance zone that's formed, and it's a pretty wide one. But so you do have the option, obviously, to wait for the market to retrace all the way down here. This seems like a pretty bullish market, and you would like to be thinking about getting long somewhere in here, first of all. So just something to think about. Now this up here would normally be red, but it's yellow, or what we call a caution zone, kind of like a yellow light on a stoplight, and that's basically telling us that this is an area that we want to certainly monitor for resistance, but ultimately there's a lot of strength in the market, so we wouldn't want to just lean on this completely for resistance, and our expectation is that the market will take that out. So that's the difference between a caution zone and a normal resistance zone. So let's play this again. You can see we're testing basically to the low of this to the low of this level 3 bar. So certainly that level 3 retracement trade is a relatively high edge trade. Doesn't mean it's going to go to the moon, but it's a pretty high edge trade, and you can see we've rallied 3 points or so off of that bar, or off of the combination of this. Now we're running into this resistance, or this caution zone, that we want to look out for. Certainly, it's not reason enough necessarily to get out of a trade, but that's certainly an area that you might consider getting out of a trade. And so at this point, what I'm thinking is, can we take out this high, make new highs? And if so, it's probably up and away. If not, can we take out this support zone down here? If that were to happen, if you can see my cursor, the green support zone toward the low of the day. If that could happen, if we could take the low out of that, that's obviously a pretty bearish indication. So just want to kind of monitor a few things, but that's kind of my thinking at this point. Is if we take out this high, let's see if we can ride that a little bit. If we take out this low, we're probably gonna, let's see if we can take that out as well. Now here is something that's interesting at this point in the day, around 11:15, 11:30 Eastern time. We have our first bearish structure. It's not a level 3 bearish bar, but it's a level 2 or strong selling aggression with immediate follow through. So it's a bearish indication. It's not overwhelmingly bearish, again, until we take out this support zone here. It's not something that you just want to jump on short, but it's at least telling us the complete bullish domination is over at this point. We want to monitor, again, these bars. We're either into chop at this point, or we're going to go ahead and we're going to test these lows and see what happens there. So we're either at chop or we're testing the lows, but we're not in a straight up vertical up move anymore. Hopefully that makes sense, in that this was the first major bearish structure. So at this point, at least we know there's two-sided activity in this market. Either the bears are going to make a push toward this low, or we're at least in chop right now until we could take this out. Okay. So let's play it again. So I realize this video is getting a bit long. Thanks for hanging in there with me if you are. Hopefully we can get some education on that. Okay, so here is a level 2 buying bar right here. And so again, you know, until this low is really taken out right here, or this high of this, I would expect some chop at this point. I can remove these. But you know, let me actually pause this, and again, because we had this, let me try to explain this thought process. We had this strong bullish sentiment, then we had some two-sided activity here and some two-sided activity here. So my thought process at this point is, can we take out this high, which would be relatively bullish, or are we going to take out the low of this level 2 bar? Now, you know, but until we have either one of those, it's essentially a chop market. It's two-sided. Okay. So let's play this again. Excuse me. Okay, we're testing that kind of in between chop zone here. But you can see, obviously, we have it's clear the evidence is showing us there's two-sided activity in this market. So, you know, look to fade, you know, buy the lows of this zone, sell the high of this zone, or wait until there's actually a victor, so to speak, and this consolidation area is taken out. The important thing I'm trying to talk about here is just trying to determine the logic or the way in which you look at the market. And the way that I like to think about it is that as things are happening, I try to say, okay, what does that mean? What's the market trying to do? Okay, how good of a job is the market doing at what it's trying to do? And just try to make, let me pause it. Just try to make sense of this at this point. So now you can see we had another major structure that we want to analyze, and this is a level 3 selling bar. So at this point, we want to see, is there follow through below? Is there a full bar below? Can we take out this? If so, we're most likely going and at least testing this low, probably going to make new lows of the day. We want to just kind of monitor that. If, however, this thing gets rejected and we get a full bar above this, it's probably going to take out the high. But at this point in time, that's kind of the thought process. Okay? And another thing is that, you know, our filter is green at this time. Our bigger picture bias is up. So I like to always talk about putting things in context. And so the idea here is that we want to see a little bit more proof if bears are coming in, because we have other bullish evidence. Whereas if this was a level 3 buying structure, we don't need to see as much. We could probably just get on board knowing that it fits in with our other evidence. So in other words, the burden of proof of this level 3 is a little bit higher because of our bullish indication at this point. Hopefully that makes sense. So let's play this. And you can see we're testing. We've just taken out the low. Can we get a full bar below? Now I define a full bar as not touching this bar is the high of this bar is touching the low of this bar. It's semantics, but again, the burden of proof is a little bit stronger in a bullish environment than it would be in a bearish environment. Hopefully that makes sense. But we want to see, can we get some serious follow through here? If so, we're likely testing this low and probably the low of the day. Okay. If, however, we turn around and take this out, that's a very bullish indication. Okay. And again, we just tested the low of this zone, the low of this green bar to the tick right there. So it's another important point to notice, is that we're in this chop zone, so to speak, from basically here to here, and you can see we've tested both to the tick, and we want to see which way it's going to go. Let's play it again. Okay, now we've taken out the high of that level 3 bar, and again we're testing the high of this chop zone. Okay, there we go. We just took out, we just made new highs on the day. You can see that it wasn't on major aggression, so you want to monitor that. We want to see if we can get some kind of a level 2 at least bar, or a level 3 bar, or even a high velocity move to confirm that this thing wants to head higher. At this point, it's just a level 1. It's just kind of a test of the high. We want to see if we can actually get some acceptance above that. Okay. So there's a high velocity move now that's come in. That's an indication, and you can see that our filter is showing us that some strong order flow has just come in a few minutes ago. Again, that's obviously a very bullish indication, but let's rewind and kind of analyze this again. First structure of the day, bullish. Filter's green. Bigger picture bias is up. We had this two-sided chop zone, I'll call it. We tested the low, we tested the high a few times, and now we've busted up through it, and we've done so on a high velocity move here, and then a level 3 buying aggression bar. So at this time, we've made new highs on a level 3 bar. You have a couple of options. One would be the breakout trade. If you do take that breakout trade, obviously you're saying I'm not going to miss out on a move, but there is a little bit more risk on a breakout type of a trade as opposed to a pullback type of a trade. So you'd want to keep your stop at least a tick or two below the low of this bar if you did so. But it's kind of a choice you're making between do I miss out on the move if this thing just goes to the moon, or do I want to be more patient and wait for the retracement? That's kind of a personal preference. There's no wrong answer. This certainly would validate a breakout type of a trade, in my opinion. Another option, again, though, is waiting for the retracement trade toward the low of this level 3 bar, which also happens to be a support zone now. You can see this, caution zone has turned to a support zone, and our filter's green, bigger picture bias is up. So that's obviously one of those kind of key confluence type of an area that we talk about, where a lot of pieces of evidence are coming together. So you can see we did not have immediate follow through of the level 3 bar. So the retracement trade, certainly, if you're in the breakout trade, great, hold on to that. But if at this point, otherwise, you probably are looking for that confluence type of a trade where things are lining up toward the low of this bar, the green zone, and so forth. Okay, now the support zone switched a little bit, and so you could wait for you could still get on board here. This certainly makes sense, or you could wait for the market to test down to this lower level, depending on your level of aggression. Again, here's a yellow caution zone telling us monitor this area. It could be resistance, but ultimately we think the market's going to pierce through here. And obviously, if we make new highs, we'd like to see it on some pretty strong aggression as well, like we saw here. Okay, now here you can see that our caution zone has turned to a support zone. So if you weren't already long from this level 3 retracement trade right in there, if you weren't already long, certainly this area is a pretty good spot to get long. It's a support zone, green filter. Again, the bigger picture bias is up, and all of our structure early in the day is pretty bullish. So certainly this is a good spot to be getting long as well if you were not already long from here. Okay. did get long here, obviously it's not working out very well. And that's okay. You're not going to be 100%. When that zone shifted back over to caution, probably a pretty good indication to get out of that trade. We don't know that the market's going to sell off, but it's an indication that there's at least two-sided activity. Okay, so losing trade if you did get long here. Obviously, if you got long here, is a winning trade. Now you're thinking about getting long toward this area, this green area down here, this support zone. Again, still a green filter. No evidence of strong order flow coming in. Now here's a level 2 selling aggression bar. We want to ask ourselves here, do we get follow through below this level 2 bar, or do we get rejection above? And you can see that we decelerated when we tested the low, and then we took out the high on a level 2 buying bar. That's a very bullish indication, kind of a two-step, and you can see that at least short term bulls are winning this one. Okay, and that coincides with our filter and our bigger picture bias. So just kind of that's just the thought process that you want to teach yourself if you're using this software. So let's play it again. Okay, now we make new highs by a tick but decelerate, so probably don't want to get on board a pure breakout. And you can see now getting long around this 36, 35, 50 certainly could make some sense as well, with the filter that we have and the bias that we have. Although caveat there is that it's near the cash close. I don't advocate trading at this time, but the logic certainly makes sense. That's not a trade I would certainly have taken at this time of day. It's just too volatile, especially ahead of options expiration day tomorrow. So hopefully this made sense. This is getting long. I won't do a bar by bar replay of gold. It's just getting too long of a video. But you can see here in the ES that there was certainly some good information and some evidence that you can use to at least keep you on the right side of the market, potentially help you get into some trades, or help you make decisions, confirm another trading method that you might be using. So hopefully that made sense and you got something out of that. Let me pause the video and I'll just bring up a gold chart and we'll just look at it. I won't do a bar by bar, but obviously the same logic would apply on any market, any time frame. You're looking at this type of evidence, and that's kind of what we teach in our training and in our member center and when we do our sessions with our members. So hopefully that made sense. Let me bring up a gold chart real quick here. Okay, here's a gold chart, and again, this is a 1 minute chart. You could do this on any time frame, but early on in the day we like to look at our first structure, and it was a level 2 selling aggression bar with immediate follow through, and actually had to follow through on a level 3 selling aggression bar within another level 3 selling aggression bar. So obviously very bearish start to the day. And at this point, certainly, this is kind of the sweet spot trade right in here with these two bars overlap. It didn't happen. The market didn't retrace all the way up to there, but that certainly would be a trade that I would be looking for. Full disclosure, I did not trade gold today. I just looked at the chart after the fact and saw that it was pretty interesting. And obviously, anybody that does trade gold can benefit from this as well. Then we make new lows on a level 2 bar. Test up to the resistance zone, go through the caution zone. Here's another level 3 bar, again on the new low. Happens to be, a filter is red. We know that the high of this level 3 bar should act as resistance. It also corresponds with this red resistance zone, so certainly kind of one of those perfect kind of confluence type of a trade setup right in there. And you can see we just continue having bearish structures until this point here where we have our first bullish structure of any import here, and so we want to ask ourselves, kind of like we looked at that on the other chart, which way is it going to go? So you can see that the low was tested, no full bar below, high was tested, we got a full bar here and here. So again, it doesn't mean you want to get long. It's not what that means. It just simply means this pure wave of selling is at least now two-sided. So now we're either going to be in chop mode, or we just have to wait and see if we can get the low tested or take out this red resistance zone, which we did, and you can see it turned green and held there. That's late in the day. Our filter's still red, but that's just a quick look. Same logic, just happens to be a different market in gold. So hopefully that makes sense. This video is 25 minutes. If you're still with me, I really appreciate you hanging on there. And if you have any questions about this at all, by all means, let us know. And we'll go from there. Otherwise, talk to you soon. Thanks.